Hello, chart watchers, and welcome to this Monday, June 11th, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we start off a new week with the market mostly in the green. The Dow Jones Industrial Average currently up 45 points. The S&P 500 up another 9. The NASDAQ up 21 points, and the Russell 2000 up 2. So we are seeing strength across the board. The 10-year Treasury yield up 2 basis points, 2.96%. Still remains in this short-term uptrend, but kind of sitting in the middle of a more intermediate-term trading range between about 276 to the downside and 311 to the upside. Volatility index continues its decline, actually up just a little bit today, but clearly has been moving lower both over the last couple of weeks and over the last couple of months, as you can see. Healthcare having another strong day. It broke above 84 last week, and it continues its move to the upside. Consumer staples having a strong day. The consumer stocks in general doing well. Consumer staples, this is a pretty big level. This is a reaction high that is clearing around $51. The reaction high was posted at the end of April. So about 5-6 weeks later, we are trying to clear that level. This could set up a little bit more strength in the XLP in the near term. Consumer discretionary continues its unabated move to the upside, just continues almost day after day, moving to new highs, which is great news. Transports, I think this is a really key part of the stock market to keep an eye on. Transports, I think, made a big breakout above 10,800 just a few weeks ago. It's been holding that rising 20-day moving average, and today it's making another breakout. Airlines earlier were having, among the transports, airlines were having the strongest day. But really, railroads and the truckers on the charts look the best. You can see railroads after a 20-day test moving back up, breaking out again. Truckers doing the exact same thing, moving up, pulling back, hitting that 20-day moving average, and now breaking out again. So transports here looking really good. Okay, Erin, it's another new week. Crazy week last week, I guess. You know, saw the Dow finally start to play a little bit of catch up. We got the U.S. meeting North Korea in a historic meeting coming up this week, and the market just kind of, I don't know, trotting along here, maybe plodding along better to the upside. How was your weekend?
Oh, I had a great weekend. Really pretty much relaxing, spent some time with my girlfriends. My husband was kind of sick though, so that wasn't good, but gave me some time with my girlfriends while he recuperated.
Yeah, I had a little golf, a little boating, spent some time with some family, friends. Good weekend all in all. So ready to get back into it. The market seems pretty good mood.
Yeah, so far I think both of us were thinking we'd end up neutral or mostly unchanged this week, and I think we're kind of on that path. I mean, not huge gains here, but it's up. You got to like that.
Well, the S&P does have some overhead resistance between the current price and about 2,800, 2,775 to 2,800. So we'll see whether or not the gains can stick. I mean, I'm very bullish, so I think eventually we're going higher. It's just a question of whether or not we go right through this resistance area on the S&P or whether we back off and consolidate a bit.
Absolutely.
At least that's the way I view it.
Certainly. Yeah, it should be an interesting week. I'm curious how it's going to all play out with the news you were mentioning earlier. But what do we have for the week? Tom, you're doing a workshop tomorrow. Do you have any idea what you're going to do it on yet?
I completely forgot about it until you just mentioned it again. I do need to go back. Normally I look at the survey results almost every day, but I didn't look from last week. So if you send in comments regarding maybe a possible workshop, I haven't looked at it yet. If you haven't sent something in, you still got time. So make sure you fill out that survey when you leave today.
Absolutely. And on, let's see, Thursday, we have Bill Shelby coming down, not for everything stock charts, but to talk about his trading style. And then we have Grayson Rose coming in a week from then on Thursday. And then Julius is going to be a guest for us next week as well. So we've got some very exciting guests coming up. I am definitely looking forward to your workshop tomorrow, Tom.
Yeah, I am too.
Yeah. Well, today we're going to start with our Monday setups, followed by an earnings spotlight. Tom's going to take that. 10 and 10, we've got our first symbol, First Solar, FSLR, if you want to go take a look. And finally, we'll finish up with my DecisionPoint Report. I'll let you know what I'm thinking about for the upcoming week based on our indicators and signals. So let's go ahead and get started, Tom. I think you probably have a little bit in the way of technical news and headlines right now.
Yeah, there's not a lot of economic headlines out today. In fact, there were no significant economic reports out. So the bond market kind of just trading off of technicals, not really doing a whole lot, up a couple basis points. We did move up back above the two key moving averages, the 50 and the 20-day moving averages. And after pulling back just beneath it on Friday, we're back above those two today. So I do think if the 10-year Treasury yield can clear that 3% level, it's probably going to make another move up to 311 to test that earlier high that we saw about 3 or 4 weeks ago. So that's something to watch to the upside. To the downside, if we were to pull back below 290, then I think we'd have a chance to maybe go back and revisit that recent low around 276, 277. But for now, with really no economic news out to speak of today and very few earnings reports, the bond market just kind of meandering, going mostly nowhere. A couple of things to talk about, though, and I'm going to pull up my blog article from earlier this morning rather than recreate some of these charts. The first one I want to bring up is the XLY XLP chart. This is a ratio of consumer discretionary stocks versus consumer staple stocks. And I just want to point out, in the open, when I was giving the update this morning, I was showing how consumer stocks are performing really well, and the staple stocks actually outperformed the discretionary just by a tad, or at least earlier it was up just slightly. And I think maybe outperformed on Friday or late last week as well, but not by much. But if you look back throughout the course of 2018 thus far, the XLY, consumer discretionary, is just pounding the consumer staples area. This is not a signal of a bear market on the horizon. This is clearly a signal of traders believing that our economy is strengthening, it's gaining strength, and companies that sell products, sell the things that we want as opposed to the things that we need, those companies are doing extremely well right now. And that is a good sign for the market, because when you look at the XLY versus the XLP and you factor in the correlation, how well does this ratio correlate to the S&P 500? We have spent, this goes back 15 years, this is a weekly chart, we spend almost all of our time in positive territory. So one of the key signals that I look for in the market when I start to get a little nervous is when this ratio is going in the other direction. Like back at the beginning of 2016, I was pretty nervous about the market. I was cautiously bullish because the S&P hadn't broken down. But the reason I was so cautious is that money was rotating very quickly away from consumer discretionary and toward consumer staples. So that means the market was getting very defensive. And so overall, since the 2009 market low, we actually bottomed on this ratio in 2008, toward the end of 2008. But since then, we've basically been going higher with periods of consolidation, maybe a little bit of unwinding, and then we move higher. There is just no sugarcoat. I mean, if you're a bear, it's really hard to look at this ratio and be optimistic about the market pulling back, because money continues to rotate into aggressive areas of the market. That's not what you want to see. And this positive correlation, you can see we did turn negative for a period of time, and that was because the S&P was consolidating while money was still looking very bullish, rotating into consumer discretionary. And now the S&P is breaking out and starting to play catch up. So now we see that moving back into positive territory. Really hard for me to look at this chart and to think bearish thoughts about the market. So that was one thing I wanted to point out. Also, I mentioned home construction led the market on Friday. And I don't want to sound like, hey, that means that it's just full speed ahead for home construction. One thing I'm watching is, number one, we had a huge rally in home construction from the time, really the 2016 election through the early part of 2018, middle of January 2018. We had an advance that we don't see too often in home construction. 14 months, the index doubled. That is a tremendous move to the upside. You got to keep things in perspective and realize when you get a move that's that strong, when you do finally get some selling, a lot of the panic occurs because everybody getting in at the top sees a couple of down weeks like this. These weren't just mild weeks. These were pretty big hits to the downside, and it really scares a lot of folks. And so as we continue in this channel to the downside, I think we're getting closer and closer to key areas where we could see a major reversal in home construction stocks back to the upside. So we did rally on Friday, but we are still in the confines of the downtrend. And I noticed today home construction was the weakest industry group. within the XLY or the consumer discretionary area. We want to see this downtrend break. If you're bullish home construction, which I'm starting to get a little bit more bullish, I want to see this break. I do like the fact that we have not only tested the initial Fibonacci retracement, which is at 38.2%, but we've also gone down to this 50% level, or almost to the 50% level. I think this is an area where we could see a turn on home construction. So maybe keep an eye on that. If we get back down close to the bottom of this channel, it's also going to coincide with that 50% Fibonacci retracement level. Certainly one chart that you're going to want to keep an eye on. Finally, in the blog, I wanted to point out the truckers, because it wasn't that long ago, 5 weeks ago, it looked like we were breaking down. We had a big breakdown below a key area of support. Truckers had made a huge move. This was the initial reaction low that we saw down around 770, and on a closing basis around 785. Notice we gapped down on big volume below those levels. And then when you come back up, you expect prior support to act as resistance. And when it doesn't, you expect the 20-day moving average to hold as resistance. And we didn't do either one. We went through both of those. That's typically a pretty good sign. We've gone all the way back up to resistance, pulled back, and notice that these green arrows, this is the 20-day moving average. As you're rising and you're seeing momentum build, that's what the PPO is telling us here. Price momentum is building to the upside. When you pull back, you look for 20-day tests. So far, we've been holding that and rising, and we were getting close to a breakout on Friday. And if we update the chart, you can click on it and click on it again here to see the live version. It's a really nice feature that Stock Charts allows you within the blogs. But you can see today we are now up another 2/3 of 1%, and we are trying to close at a new high. If we get through 870, I think the truckers look pretty good. Also, the railroad stocks doing really well. The industry group making another breakout. Now, you look at this and you say, well, it's higher price, but we have a lower PPO. Shouldn't we be concerned? Well, if we fail on this breakout and come back down, then yeah, I think that is a little bit of a warning sign. But keep in mind that this is based on price. It's not based on volume. So you can break out and have very strong volume. I want to see what the volume is at the end of the day. If we get a breakout and volume is strong, at least as high as Friday or even better, then I'm not going to be as concerned with negative or slowing price momentum. I'm going to be more interested in the fact that we're getting heavy volume to accompany a breakout, which to me is very bullish. So that is definitely one thing that I would watch to the upside here. The other thing, the PPO is starting to turn back up, and we are breaking out. We don't know how far this rally is going to go. So sometimes you get these, they look like negative divergences, and then you get 3 or 4 days of rally, and all of a sudden the PPO turns higher, and that negative divergence disappears. So at the first sight of a negative divergence, I would be really careful acting on that. Let the stock, or in this case, this index, industry group index, let's see how far it runs, whether or not it makes the breakout, what kind of volume comes in, and then put the whole puzzle together that way, rather than just initially looking and seeing a higher price and a negative divergence. Because a lot of times that happens after a fairly mature rally. You're almost always going to see a negative divergence when you make the breakout after you pull back for a little bit. So I do think that you can make improper calls, technical calls, looking at these negative divergences too early. That's essentially what I wanted to talk about in the blog. So let's go ahead and take a look now at the autos. They were having another strong day today. And since breaking out above this sideways consolidation, this was the volume that came in. I believe this was the announcement where I think it was SoftBank was going to invest billions into GM's driverless car initiative. And that's where that came in. Now we continue to move higher. One of the things, well, let's pull up GM first. You'll see the General Motors. Here was the gap up, massive volume. It continues to push higher, breaking out above these prior highs. Very bullish action on General Motors. And then late last week, Tesla broke out. You can see the huge breakout. Look at the volume pickup. And we are continuing to move higher on Tesla. Looks like we're going to make another push for that 360 area on Tesla. That's a good sign. Erin and I were talking about something before the show. This was just a crazy, I'm trying to dig back into my years of being in public accounting and looking at it from a fundamental perspective. Rockwell Automation came out with an announcement today that they plan to invest an additional $1 billion into PTC. So let's pull up PTC. So they've got this partnership and PTC is going to get $1 billion invested in them. So this is just awesome. I mean, the news is great. Then I was looking, and it said PTC will use the proceeds to buy back its stock. And my head is spinning trying to think why a company would make an investment into another company that's going to turn around and use the proceeds to simply buy back their stock. The only thing that makes sense here, and not much makes sense, but the amount that Rockwell was contributing was 94.50 a share, I think was the amount. So if PTC is going to receive 94.50 a share, and then they're going to use that money to buy back stock, it only makes sense if their share price goes down and they're able to actually use that money to buy the stock back cheaper. So it's almost like they're becoming a trader of their own stock, and they need their stock to go lower to buy it back for this whole transaction to make sense. I don't know about you, Aaron. I cannot figure out. Maybe there's more to the story. I mean, I kind of looked at the headlines. I didn't really dig into the entire story, but I cannot for the life of me think why this makes sense.
No, I can't either.
I've seen a lot of investments, and I think it's great that PTC, says what they're going to do with their money, with the money. Why would anybody today? Somebody bought the stock at 95.88 after Rockwell Automation said they're going to get it at 94.50, which was $6, $7 above the price it closed at on Friday, by the way. So they're going to put money in at a higher price, and then somebody went out and bought this stock today for 95.88, even though PTC doesn't really benefit from this transaction unless the stock price falls. So I have no idea what's going on here.
We'll have to read up a little bit more closely on that one, I guess.
I suppose. I don't know. Anyhow, let's move on. Apple, I think we're at $937 billion market cap now. Recently broke out. You can see above the 190 high. Volume is a little suspect, though, on this latest breakout. And there is a negative divergence. This is maybe an indication of a stock that is running out of steam a little bit in the near term, which could be a problem if we fail to hold this breakout and the rising 20-day moving average. So I'd keep an eye on those levels. But our poll question for the day, if you haven't seen it already, check it out. And the question is will Apple become the first $1 trillion company here in 2018? In other words, all we have to get is another, 60, that's roughly 7% move higher in Apple for the rest of the year, and we would be at that $1 trillion mark. So the question is, it's not short term here in the next few weeks, but at some point in 2018, with the market breaking out, starting to move higher again, technology doing well, is Apple going to be the first $1 trillion company in 2018? So go in and check that poll out. Tell us what you think, and at the end of the show, we'll bring the poll up and see if we can see what everybody thinks about that. I think it will. I don't know what you think, Aaron, whether you've done the poll or not, but I think it's going to be $1 trillion company before the end of the year.
It probably will. I went ahead and just said maybe, just because that's I mean, I think you're right, but there's still a lot more of the year left, and we'll have to see.
All right.
I don't know. The poll right now, everybody's pretty much 60% of people say yes. So you're definitely in the majority right now.
All right. Well, that's probably bad news then. Let's see. RCII, this is Rent-A-Center. They actually raised guidance. They raised their earnings guidance for the upcoming quarter and for the year. And after gapping up and then pulling back, very heavy volume, it is actually making a pretty significant breakout here on the chart, assuming that it can close above, say, about 1060 or so. Currently, RCII at 1079, but that volume certainly is very, very big. Seems like the real deal here on the breakout. A couple of other stocks, then we'll get into our Monday setups. NWL raised its stock repurchase authorization. There was about $1.1 billion left on an old plan, so they bumped it up to $2.5 billion. I guess looking at the stock that's been going down and down and down throughout 2018, they wanted to show a little bit more confidence in the company, so management has authorized an additional $1.4 billion to take it up to $2.5 billion now on their stock repurchase plan. Stock market seems to like it up about 3% today, but still tech not so sure. I like it. We'll see. And then SRE, two ownership groups that own roughly 5% of the stock released a letter and or presentation outlining how this company could become worth 11 to 16 billion dollars. I guess if I'm holding the stock, I love this announcement because the stock was sitting back last week at closed at 101 and change, and now we're at 117, having a huge day today. It's one of the top performers, might be the top performer in the S&P 500. But I don't think this is going to last. I honestly think that if I was in this and I got this kind of news today and I went up to resistance, I'd take the money and run, because number one, you don't know if the plan. I mean, this is what shareholders are saying. If I'm a shareholder of a company, I'm going to tell you why it's worth more too. So I'm not sure that this is something that's going to actually pan out in the end. I don't know if management is going to try to execute the plan, even if it is a plan that works. So I think moving up to almost 120 here and testing this resistance level, I think would be a great opportunity to take some profits. Okay, we're going to move on to the Monday setups. And of course, we want to start by taking a look last week. I know, Erin, you had a pretty good stock.
Yeah, it was doing good. And I think it's still doing pretty good, actually. 41.14 is what it's at right now.
Yeah, GSK, I think, is up 1%. I think mine, as of an hour or so, goes down a couple percent. Biotechs continue to kind of struggle. I mean, they're starting to show some strength on a relative basis, maybe just a bit in the near term. But they do still have some hurdles to overcome, and Alexion certainly kind of falling into that group. And it is a volatile stock, as I mentioned last week. But why don't we go ahead and pull up the charts of those? Actually, do you want to pull up the charts of those two, Erin, and then
sure,
setups for this week?
Oh, sure. Okay, here is mine, GSX. And we got in at 40. What did we say? 40, 67, somewhere around there. So we got in right about here. So that was a pretty good move off of that PMO buy signal, I would say, or at least if I recall, I picked it because we had that move. It was starting to turn back up, and I really liked the breakout. So we'll have to see what happens. I would still probably be holding it if I were looking at it. And then the other,
I would just say on the GSK, I mentioned last week, I like that one when you picked it. And I think the XLV making the breakout, the healthcare ETF, certainly is not hurting. Money is beginning to rotate a little bit into healthcare. It was leading the market earlier today. And so I agree. I think you get a breakout on a stock that's in a group that's breaking out, and that only adds the little bit of fuel to the fire. So I think that was a great pick.
Yeah, thank you. And let's look at yours. There we go. So you got in at about 120. So we were in here right about on Monday, I guess, right about there. So not a great week, but not horrendous.
It's a pretty volatile stock, and I do think it's got great support down around the 113, 115 area. The recent low is 115. It had a gap up on some very heavy earnings-related volume that came in at the end of April. So I think that this one continues to consolidate. I still like it, but the real clue is going to be a breakout above the 123, 124 level, and you want to see some volume coming in on that move.
Yeah, absolutely. It's interesting. We have a lot of ascending triangles on stocks right now, and I'd say that's what we're looking at here. So that's a good chart pattern setup, because that, of course, is a bullish pattern. Yes. All right. Let me show you what I've got. I went ahead and I ran a scan. I'm going to say a scan. It's like the one that you can get to if you go to the Market Watchers live blog. There's a link to my kind of basic PMO scan, and I just manipulated it somewhat. I got about 8 choices. I ended up narrowing it down to 4. So let's go ahead and let's start looking at them. EV, Eaton Vance Corp. This one came up. Obviously, we just had a PMO buy signal. You can see that the intermediate term trend model just had a buy signal. You've got OBV looks really good on this rise. We're getting nice volume coming in, and the scooter, while not in the hot zone, is still, still healthy. So I thought this one looked pretty good, and really, it was a tempting one to pick, because I think you could really set a tight stop just under that $56 range. So like at 55.50, right in there. I thought that was nice because you could get a decent stop in there and have, overhead resistance all the way up here at about, 60, a little bit over 60, $61. So I think there's pretty good upside potential here, and you can still set a pretty tight stop. That was not my choice. Chemours Company, Chemours. Another ascending triangle. Like I said, I'm seeing a lot of these on our charts lately, and that's good. Those are all bullish patterns. So if the majority of stocks I keep looking at have those patterns, I think that's good for the market in general. This one looked pretty good, pretty much the same reasons that I was looking at Evanston EV. And that was because, again, I think you could set a pretty tight stop here, and upside potential is really pretty high here at about $58. On the low side potential, over 53, maybe $54 at this area of overhead resistance. So I thought this one looked pretty good, but not my pick this week. Jones Lang LaSalle was another choice. And here are some of the reasons I liked it. Obviously I have a PMO buy signal set up, and then notice the EMAs are just now getting ready to, give us some buy signals. We already got the 5-20-day EMA crossover buy signal, and the 20 is just about ready to cross the 50. One of the reasons I didn't pick it was the fact that the 20 was below the 50, and although I have this buy signal, we're right up against this resistance right here. About, what is that, 172? Yeah, about 172. So I just didn't like picking that one as my choice for the week, just because I haven't seen the breakout on it yet. But I think it's still a pretty good setup, probably one to add to a watch list. But this is the one I actually picked, Providence Service Corp. And so when I looked at it earlier, it was a 75.82. Currently, it's at 75.75. So my target is up here around 80. And you can see you got the buy. The buy signal hasn't actually come in yet, but it will, I would expect, either today or tomorrow. And you've got a nice setup with the EMAs, 5 above the 20, above the 50. So that looks pretty good. I like the scooters in the hot zone now. The volume, the OBV wasn't all that exciting here, but we got the breakout, and momentum is on its side. It's already got some relative strength. And again, I would set my stop looking down here. I would look at around the 20-day EMA, around $74. So again, I think you can set a fairly tight stop here, but your upside potential, $80 plus. So my target would be about $80, and that would be my reevaluation point. As I tell everybody, when I buy a stock, I always set a stop, always set a target. And when they get hit, that's time for that reevaluation. More than likely, if I hit the stop, I'm gonna bail unless others, unless the indicators are still looking pretty good. And then, of course, anytime I hit my targets, I want to look at it and determine, do I want to pull back some of those gains and then ride it, or do I want to keep everything in it? So at this point, like it, Providence Service Corp. And this, I believe, is a cyclical. Let's see, full quote. Yes, cyclical special consumer services. And I think, and that, of course, is consumer discretionary. So I think that's a good area of the market. You just explained why earlier during the technical news. So that's what I have. What do you have?
All right. Well, let's take a look. My pick for this week is going to be Merit Medical Systems, MMSI. Couple reasons. Number one, it did pull back from about almost $56. Came back on some pretty heavy volume, but I think held on to a key support level, $48. So I can keep a fairly tight stop here. Close below 48 would certainly bother me. Intraday below these tails would definitely bother me, but I'm looking for a rebound here. Again, price support is the main reason. So current price is $49.95. I know it is up already 1.4% today, but I'm going to go ahead and stick with it. I think you can still keep a fairly tight stop with maybe $5 or $6 to the upside as a target. The thing I like, medical supplies, recently it's in that healthcare space and we're seeing some strength, but medical supplies here did break out above recent highs. So it is in a nice uptrend. I think it's got some room to run up to that late January high. So I think we're going to continue to see some strength here. MMSI, even though we have pulled back with the recent selling on a relative basis to its peers, I think the overall uptrend continues in place, and it's starting to turn back up with today's strength. So I think that we've got a pretty decent stock relative to the group. Relative to the S&P, it's kind of come back down to a relative breakout area. So I think, again, turning back up again, this could be the start of some pretty good strength. If there's one negative, it's that overall medical supplies versus the S&P 500 been in a downtrend mostly this year, primarily because healthcare is a defensive area of the market, and there are just a lot of other aggressive parts of the market that are doing better. But we are starting to see some strength in medical supplies. So I think we have come off of a pretty good relative double bottom, and I would be looking maybe for a little bit more confirmation with a relative breakout on medical supplies. But this is the one that I went with. So MMSI will be my pick for this week. A couple of other stocks that I will give you here, and I'll keep it with the relative charts that I like to use here. PLAB. Now this is in the semi group, which has been very strong. And after gapping up almost to $10, testing $10 on an intraday basis, this stock has pulled all the way back down to test the bottom of gap support at about 845 or so. Currently trading at 848. If I had seen a tail today, maybe down to 8.25, and we had rallied back, this probably would have been my pick for this week. I'd like to see a reversing candle here to make me feel a little bit better about the trade, but I do think the reward to risk, if we can get a reversal right here by 840, 845, I think this one could make another run back up toward 975.10. Maybe off of this uptrend, start to maybe put like a little bit of a cup in. We've seen a lot of this type of candlestick and follow through to the downside. I think one stock that did it mostly in one day recently was Juniper Networks, and that stock absolutely exploded after that. Let me go ahead and pull that stock up so you can see it. But here was the earnings. See that big black candle went all the way back down to fill the gap and then started its uptrend back up again. Now, this one has seen a lot more selling since that earnings, but still, we're going back down. We're filling this gap. I would not be surprised to see it turn back to the upside. So I think PLAB is one to keep an eye on. Vishay, VSH, I think is another one. Love this huge volume breakout with earnings. Took out this prior high. We're sideways consolidating. If I get this back down near $23, I think VSH looks interesting as well. A couple more. OIS, this could be a breakdown today. I did this setup over the weekend before today's action. I'm not liking this move to the downside, and the reason, the breakout occurred above about $34. So this heavy volume move right here was above prior resistance at 34. We're coming back down. There's a little bit of gap resistance between maybe 33.5 and 34. But we're currently trading at 32.85, and volume is not light today. 390,000 shares. It's on pace maybe to do about close to 750, 800,000 shares, which will be a fairly reasonable amount of volume on OIS to the downside. Now, if we can recover and put in some sort of a hammer and break back up and close around 34, I think OIS could look really interesting today. But for now, I would just be watching it. IBKR, I think this is my last one. IBKR Interactive Brokers pulled back. I was looking for maybe a higher low. You could come back and connect these lows, and you got a trend line that's been established. A lot of tails between 68 and 70. So it looks like there's some accumulation taking place. Overhead, we're going to have to get back through the moving averages. That's going to be the big test for IBKR. We are starting to trend back higher again. If I was in it or had gotten in it on this move lower, 74, 73, 75, something like that, probably would get my attention, maybe to take profits and see whether or not we can get through that 74 level. All right, those are our Monday setups. So we'll give you a quick summary on what we went over there. Erin gave you her selections, her main pick, and her additional setups, and I did the same. So for this week, Erin is going with Provident, PRSC at 75.75. I'm going with MMSI, 49.95. So we shall see. Let the games begin once again.
Indeed.
Okay, next up, earnings spotlight. And what I was going to do, I try to do something different. Of course, we have John Hopkins on here a couple of times a month to talk about what he's seeing at earnings beats in terms of potential trades, always talking about reward to risk, trying to go over stops and so forth. So I think what I'm going to do today is go through a number of stocks with you that are on my strong earnings chart list, and just go over some key technical areas maybe to watch for, or maybe they've already made some big breakouts, so maybe some pullbacks to watch for as we move forward. So let me bring up the first one, which is Fedex, FDX. Fedex has been consolidating for quite some time. I think we mentioned this one last week. It might have been on the 10 and 10. Very important gap resistance and price resistance that came in just above 255. Notice we closed back above it, and the volume did pick up on that breakout. I think we're heading on Fedex back up to about 273, 274 to test the January high. I think you now have great support coming in at about 255, along with the rising 20-day. And as we moved, the PPO moved above the center line, and we started to trend higher. We did have one slight close below the 20-day, but otherwise we've been riding this 20-day moving average to the upside. That's what I look for a new trend developing. I like to see on pullbacks, I like to see that rising 20-day moving average hold. For those of you who are not familiar with this strong earnings chart list that I keep, these are all companies that have recently beaten Wall Street estimates as to both revenues and earnings per share. So top line and bottom line, they came in better than expected. I like to trade these companies because I think they are trusted better on Wall Street. I think when management is able to produce results that can beat top and bottom line, I think that it adds to the trust that Wall Street has for those management teams. And I think it does eventually reflect in stock prices. I don't think we have nearly as much downside risk. And when these stocks do tend to pull back, in my opinion, we get buyers coming in because they have delivered results that have beaten estimates in the past. So I think FDX looks great. Home, HOME. This is At Home Group. Big breakout on Friday. We did. Now, I think, actually, I probably should preface this. Some of these stocks on this list may have just reported again, or maybe in the process of reporting. And I mention this because I'm pretty sure this was earnings related, where At Home Group just broke out again. This is where it got my interest back here in March, when it gapped up, broke the downtrend, and started rising on very heavy volume. Notice holding the 20-day moving average all the way up here until we had the negative divergence. Then we went to the 50, and then we started rising again. Notice the PPO all the way back down to test that centerline resistance, or centerline support, and then turned back to the upside. The only reason I wanted to bring this one up is I believe, if my recollection is correct, I think At Home Group missed maybe on its earnings per share, or maybe it came, no, I think it came up slightly short on its revenues. It was better than expected on it, but it raised guidance, and that's why we got the breakout. So this one actually will be coming off of my strong earnings chart list. Doesn't mean the stock isn't a great trading candidate. I think a breakout on heavy volume is strong in any environment, and especially when you're getting a company that's raising its guidance. But when a company misses its prior quarter, but then raises guidance in the next quarter, you still have to wonder whether or not you can trust them raising guidance, because they just missed their last guidance that they provided. So I tend to only stick with the companies that beat on both top and bottom line. A couple of other stocks. That's a little typo. That one's not coming up. Red Hat, RHT. I've mentioned this one before. I think this has got a great pattern. Straight up move, nice cup, pulled back. I think I talked about this one last week, getting down into that 167 area, testing that 20-day moving average, to me puts in a handle after the cup, and a breakout would then measure up to about 185, from about 172 or 3 down to 160 support. You break out, you take those 12 or 13 points and you add it to the breakout level. So I'd be looking for a Red Hat to move up to about 185, 186. And that gets confirmed with volume picking up and a close over, say, 173. Lennar, I will fully disclose I own Lennar. I do like the positive divergence that developed here, the lower low, the higher PPO, and now we've moved through the 20. Notice how when the PPO was moving down, these 20-day tests were failing, and now that the PPO is bottomed and turning back up, all of a sudden we're getting through the 20. I think if we can get back through 55-ish, that would be a great sign for Lennar. I think the home builder group, as I mentioned earlier, has hit some key support on using Fibonacci. And then you've got other stocks within this group like Pulte. This is on my list as well, so I'm jumping ahead a little bit. But Pulte, look at the breakout on Friday above its recent highs. Huge breakout with massive volume. So starting to see a little bit more rotation into some of these home builders. I think that's a good sign. ISRG, I mentioned this is one of the strongest stocks in the market during the month of June. And look at what's happening in ISRG so far in June. Breakout above key resistance at 470. If we could get a pullback to 470, I think that would be a great area of support with that rising 20-day moving average and price support intersecting there. We're having another good day on ISRG today, up 1.8%. And of course, it's in the healthcare space, which is improving. We got one of the best stocks here within healthcare, and it loves the month of June seasonally. UNH. I know I've talked about United Health on previous occasions. I like the stock. I love this pullback to test the breakout level and the 20-day moving average. Now we've recently broken out even above the January level. PPO looks good. I like UNH, continues to do very strongly. PTC, you might recognize this when we talked about it earlier. This is the one where Rockwell Automation announced that $1 billion investment, and PTC is going to reinvest their proceeds in their own stock. Makes no sense at all to me. I would sell it. I just don't understand. I would take this move to the upside on heavy volume and get out. I don't know what they're trying to do. This is one of those times where I'd probably ignore the technicals and pay attention a little bit more to the fundamentals. I have no idea what they're doing here. And even technically, I don't like this candle. And I can't imagine it's going to finish strong. I don't know why anybody would want to buy the stock based on what I read. Anyhow, DHR, next up, Danaher. I think this is a really nice looking chart. If we go back a little further, I think what you will see is a nice uptrend followed by a beautiful ascending triangle. I love uptrends followed by these rising lows, equal highs coming across. A breakout above 104 would measure up another 12, 13 bucks. We'd be looking at about 116, 117 on Danaher. I think this is a great looking chart. BPOP. Now this one bothers me. I like the chart. I like the fact that it's breaking out or tried to break out, but I don't like the reversal coming in here after getting through these tops. If it doesn't recover by the end of the day, I think this could be a fairly significant top on Popular Inc. BPOP. And I'm not saying that I would be necessarily shorting it. I think if I was long, I'd probably just move to the sidelines. I would not be surprised, though, to see it pull back to the 50-day moving average, maybe back down 45, 45 and a half with stock at 47.40. That would be another 4% or so, and I would rather just sit it out, see if I can get it back in at a cheaper price. PHM we talked about. I've got one more, and I don't know, Erin, if you've looked at any of these, but if you have and you've got any comments, you're certainly welcome, from a PMO perspective.
Well, thank you. Danaher looked great.
Yeah, that one definitely looks good. I think Beat looks good. I don't like this candle from 2 days ago. So I do think short term with a higher price and a lower PPO, I think we got a negative divergence. And that big reversal on increasing volume tells me maybe we have seen enough out of this stock to the upside in the near term. I think we could probably just see a PPO that pulls back to maybe that center line. And then also you can see the 50-day moving average, which is creeping up here. When I get these negative divergences, that's what I tend to look for, is a pullback to the 50. I'm not saying that the character of the overall chart's going to change and we're going to head into a long, lengthy downtrend. But I do think that the steepness, the slope of this uptrend could maybe go into a period of consolidation. Notice on the move up as the PPO was rising, we never went below this 20-day moving average. But now that we got a reversing candle and a negative divergence in play, I think we could be looking at some additional weakness here in the near term on Beat. But I think that could create some opportunities, especially if we get down below $40. So that's something to maybe keep an eye on. But again, all of these stocks came from my strong earnings chart list. And these are the stocks that I swear about in terms of trying to find trading candidates, try to create high reward to risk opportunities. And so from an earnings spotlight perspective, these are the companies that I would be most interested in. What do you think on this one? I'm assuming your PMO probably is.
Oh, yeah, absolutely. Turned down below the signal line. I would say, honestly, if anything, this is a shorting opportunity. I know you generally don't short in a bull market. I just generally don't short in general, but that one's certainly interesting as far as a short, because I would agree with you. It's still got further to go, and that area of support should hold up. I don't think we're going to be seeing anything turn up anytime soon here.
All right. Well, if you've got a minute, why don't you pull this chart up, BEAT, on your PMO, show everybody what you're referring to.
I got it. Let's go here. So BEAT.
Yeah.
And there you go. See, look at this PMO. I mean, you're right. We've got the negative divergence going on. And look at this. It really was twitching around. It really wanted to make that move upward, but instead it ended up declining below the signal line. And really, when you look at a rising trend like this, you should see the momentum building and not flattening like this. That really bothers me when I see that. And again, I think that, seriously, I mean, this could be a shorting opportunity, but I typically don't short. So especially in a pretty good bull market situation. So, but yeah, I have to agree. And then what was the Danaher symbol?
DHR. Yeah, that's a great looking chart in my opinion.
Absolutely. And look at the PMO here. You can see we're getting slightly rising bottoms, but they are rising with the bottoms on price here. We've got the buy signal, and now you've got a PMO value reading that is higher than that previous top. We're about to get the breakout. I still think we're going to see it. I mean, great setup of the EMAs. Good one to pick out for sure.
Yeah, and I like to see the breakout because, we could go back. If you look at the March high and then again at the April high, we had a couple of times where it looked like everything was lined up beautifully and then we didn't make the breakout and then pulled back. So it's just one of these things for me, from my perspective as a trader. I don't like to get in right at the breakout point. I'd rather wait, and I'd pay an extra $1 to see it make that breakout first, because I don't want to get in at 104 or 103.75 and have it
see a false.
Yeah, and have it pull back one more time and test the rising lows. We could see another pullback, say 103, or excuse me, 100.
Yeah.
Maybe back to that 100 recent support and connect that rising trend line again. And so it's possible I'd be down $3 or $4 on the stock. So right now the reward to risk is not there, but I do think on a breakout, because of the measurement from the high of that down to the low, that's $12, $13. That's a pretty nice measurement on the stock.
Absolutely. And of course, I'm chart pattern crazy. I always look for the chart patterns, and it's a very bullish pattern, and in the intermediate term, no less. So I think that's very positive on that one.
Yeah, and I like these continuation patterns. Having a prior uptrend in play on Danaher before we got into the triangle, I think is really particularly bullish here. That's exactly what you look for when you have an uptrend. You're looking for a period of consolidation to unwind, being overbought and so forth. And now we've got that period of consolidation. So this breakout, it's enabled your PMO to go back down to your center line support after being very overbought back in January. And so this one's got some, I think, could get, have a lot of fuel in the tank if we get this breakout.
Yeah, and you can see that on these previous breakouts or attempts at a breakout, the PMO values weren't, the bottoms weren't really rising at that time. And now we're finally starting to see that. So, and now, as I said, you got a PMO reading that is almost above 1 and certainly above that previous top. So things are lining up here for sure.
No doubt about it. All right, so we'll give you a quick summary of some of the stocks that we talked about on the earnings spotlight today. There they are. Number of really good candidates. At least, some of them may be broken out, might need a little bit of a pullback, but these are all stocks that not only look interesting from a technical perspective, but also at least gives me the confidence to trade them, because I know that they've recently beaten top and bottom line. And I think Wall Street really respects companies where the management's able to produce results in excess or over and above what they had previously guided. So that's my own personal preference anyhow.
Yeah, absolutely.
All right.
Wow, 10 and 10. You ready to do this? We're starting it right on time. So we'll see how close we get. Of course, we won't start the clock on you until I finish showing that RRG, so I'll get started on that. I did write down all of your requests up until, mostly up until we were talking about the earnings. So here we go. I did this on a daily RRG, so we get a really short-term look. You can always get rid of some of these tails, and that can help. Of course, you can scoot on in here. A couple interesting ones, I would say. ARA looks interesting. Let's see, any of these yellow ones turning the other way. Maybe RS. I'll have to look. So I will look at these and I try to pick from different sectors. I do now keep a spreadsheet. So unless it's the most popular in the chat room, it probably won't get looked at, if it's been up for the last week or so, then and looked at, we won't look at it again. So I do try and keep track of that for everybody. And with that, let's go ahead and start with First Solar, FSLR.
Okay, First Solar. First of all, this thing has just been ugly. The renewable energy space has been horrible. So, you look at it on a daily basis and you say, well, there's no hope. Well, I'm not going to go that far. I do think we actually made our way down to a very key area of support. We had a huge gap up on the heaviest volume we've seen on the chart. That was back in October. The top of the gap had not been tested until this moved down to the downside. If you see a continuing move intraday down 50, even below 50, and you get a big reversal and the volume picks up on that reversal, I would be then using that as an opportunity maybe for a short-term trade. I don't like catching a falling knife. And you can see we did print a hammer after testing the gap, top of gap support here a few days ago. And we've kind of continued to move back down into this range. But I think if you get a low beneath these lows and can hold it, I think it's much more credible as a reversing candle. And I would look for maybe a quick move back to 60. You would still be in a downtrend, and I would take that money and run, by the way. But I think it would be possible if we get a reversing candle. This is one to kind of keep an eye on, maybe for just a quick bounce. But I wouldn't be surprised to see either maybe $7 bounce to about 57 here, or maybe get all the way back up to $60. And that would still be beneath that falling 20-day moving average. And then I would take the money and run. But First Solar looks interesting to me.
All right. And the most popular request in the chat room is, and everybody's bated breath, GWRE, Guideware Software.
Yeah, I believe this was earnings related. And I'm not sure whether they pull back. That doesn't always mean they didn't beat. We had a lot of movement to the upside. The stock ran from 78 to 96 prior to earnings. So sometimes you get the move down just because all of it was already built into the price. The good news was built in, and then you have it's kind of buy on rumor, sell on news kind of a thing. But I do like the fact that we're reversing at the 50-day. I would probably keep my stop pretty close to this 87 level, with maybe an intraday stop below the low that was just recently printed. And that, again, I'm assuming that they beat on the top and bottom line. I don't recall whether or not they did, in fact, beat. But that would be a level I would watch on a closing basis, and there's the level I would watch on an intraday basis, because we did reverse off of that on some pretty heavy volume. So we went from 96 down to 86 on heavy volume, and then buying came in. So you don't really want to fall much below that level. So watching closely.
All right. Next one on the list is going to be PFIE, and that is Profire Energy, Oil Equipment and Services.
I don't have it on the relative chart, but I can tell you just from looking at it, it's certainly a very strong stock on a relative basis. Anytime, you're breaking out and then threatening another out, and the group 4 months ago in the group versus where this stock is, you got some nice relative strength building. I like today's gap up for two reasons. Number one, volume is strong. You can see the volume down here picking up off of recent days. I mean, we're just past the halfway point of the day, which was 1245. And we've already done 865,000 shares. So we're probably looking at 1.5 million shares to challenge these huge. The other thing I like about it is we had this downtrend. So short term, we had a downtrend after the stock got very overbought. You can see the RSI had made it all the way up to 80. After pulling back for a while, though, RSI dipped back close to 50 And we got very close to the breakout level here twice. So anything down close to that 4 level presented much stronger reward to risk area. And now we're getting a big breakout to the upsides. The PFIE, I think, looks good. The only problem with it now is you're closer to resistance than you are to support. So it's not easy. I can't really set up it from a reward to risk standpoint. So I like the stock. I just have to have wait for a better price, either breakout or maybe another pullback, consolidation, further consolidation down closer to the $4 level.
All right. In the healthcare providers industry group, ARA, American Renal Associates Holdings.
Okay, I like what's going on here. I don't like the volume overall. I mean, it's a little lighter than I would like on stocks that I trade. I'm going to pull this one up in the relative chart because the healthcare providers I've talked about, I think there's a really nice inverse head and shoulder breakout that we've seen recently with the group. And this is a stock that had not been performing very well relative to its group, but it is trying to make what I would say is a fairly significant breakout if we can get it above $16. So looking at the chart, I like the fact that you're in a pretty good group, but the volume has been light as we make our way up to what I think is a pretty critical area of resistance. If the volume picks up and we can get through 16.25, then I like this stock a lot better because it's in a space that is performing well. But until we get that breakout, I'd probably watch from the sidelines.
Okay. The next one, interesting stock symbol is GLOB, G-L-O-B, Globant. It's a software company.
Okay, leave this one right where we looked at it before, with the relative charts, because you can see software, just a great area of the market. So if I was annotating this, first thing that you got to know with any software stock is that you are in the right space. Software just absolutely tearing it up relative to the S&P. If you're trying to beat the S&P 500, you want to be in a group that's beating the S&P 500. So that's a couple of good signs. Now, GLOB relative to the group is starting to do better recently, but it's really more sideways. So it's kind of going along for the ride over the past several months, but it is starting to show a little bit better relative strength. Huge gap up. I'm assuming this is earnings related. We are near some key resistance. So I'd be I don't think I could jump in right at this point because you've got overhead closing resistance. It looks like 54.75 or so. You've got intraday resistance at 56, and we're currently trading at 54.17. The rising 20-day moving average, however, is a different story. And if we go back and we test that, I would be a buyer. I think this is a good stock, solid stock in a very strong industry group.
All right. And it looks like our only consumer staples stock again. We usually end up with at least one in food products industry. Hain Celestial Group, H-A-I-N.
All right. Short term, I like a little bit what's going on. I don't like this failure at the 50. I think $29 is a key area of resistance. First, I think you can tell that there was a breakdown. Look at the volume that came in here as we closed below $29, and that is where we've been failing. Now, maybe we'll go back, test the 20-day. That could put in a reverse right shoulder. If you look at this could be a left shoulder, even here, left shoulder, neckline, come back down to a head, right shoulder, right side of the neckline. Right shoulder could go in on the 20-day, and then maybe a breakout. So I'm giving a possible reversing sign here, but I might have to wait and see that actual move before I'd be overly excited, because you are in consumer staples, which has been awful, and you're downtrending. This is not the kind of stock where you're going to outperform the S&P 500 until it starts to uptrend. We haven't had an opportunity, but can we hold that rising 20-day moving average on a pullback? If so, I think we got a shot here. Otherwise, I would look elsewhere.
Okay. The next one is Applied Materials, AMAT.
Yeah, Applied Materials in a great space. I think semiconductors look good, but really over the past few months, this one is not performing as well. I'm not giving up on it. I think that you've got some support to watch right here. I think as long as we hold that support area at about 45.5, I'm okay with it from a longer term perspective. But you've got a lot of semis that are breaking out right now. And then you take a look at something like Applied Materials. where we are trending lower, been struggling with this downtrend. So I think right now we're in this range. Do we go down and hold support at 45.5? And to the upside, we've got recent high at 53. You got gap resistance, 53.75. You got trend line resistance, 53. You got your moving averages, 51 and change to 52. So if you could get up, say, to 54, you're taking out a lot of overhead issues. But until we get there, I'd be careful with applied materials in the short term. I think there are other semis out there that look better.
All right. From the Industrial Machinery Industry Group, Parker Hannafin, PH.
Okay, PH. I'm kind of okay with this one. Again, if I'm looking for leadership and I'm trying to outperform the market, this one's been downtrending for the past few months, not really showing any signs yet of taking out key levels. Here was a move down. Here's your reaction high. Here's a move down. Here's a reaction high, move down. I like the fact that we took this level out right here and so far have higher lows. But I really think that off of the big selling in January, February, we have not been able to get a resistance, or excuse me, a reaction move back above about 187. And we're still $12 off that level. I just think that there's a lot of other stocks out there. I think if I was trading this one, I'd maybe watch 170. I don't want to lose that level. If you're going to use this as higher high, higher low, and we're starting into another move to the upside, you really don't want to roll back over below the moving averages and below the support level. So let's call 170 a key area of support on PH.
Okay. So the next one, let's see. The next one is going to be Janus Henderson Group, JHG. They are asset managers.
Yeah, I've been watching. I'm going to go back a little further. I actually like this stock. I like the space because I think the asset manager is part of that financial group that'll do well if rates continue to move higher. And looking back on the chart, I went back a year and 6 months here on this chart just to show you. Here was a high. Here was a big breakout. And notice these pullbacks held right around $30. Recently, looks like we had a low at about 30. And you've got highs, recent highs up at about 40, 41. So I think the key here is that we are in the lower end of what I would consider a major longer term or intermediate term trading range between about 30 and 41. We're down at 32. So if I was in it, and this would be more from a longer term perspective, but if I got in at 32, I could probably keep a stop around $30 and my target would be up around 40, 41.
All right. And our final one will be Solar Edge Technologies, SEDG. This one's kind of turning the corner here on the RRG, so I thought it might be interesting.
Yeah, it's been down on a lot of volume. Of course, it's following the renewable energy group to the downside, but it is a clear, let's pull this one up on the relative chart. It's a clear winner relative to the group. Here's the CRE getting absolutely, the DW CRE, which is renewable energy, getting crushed. But look at what SEDG is doing relative to the CRE. So it's clearly one of the top performers. So I think what I would pay attention to then is price support. If you've got a stock that is doing really well relative to its peers, as long as it holds on to price support, I'd be okay. I'm going to say, and this is a fast moving group. This is a stock that's got a lot of volatility. It was over 70 less than a month ago, and now it's down in the low to mid 50s. So that'll tell you something about how quickly it moves. But it could be back up at 70 in no time. I would watch 48 to 50. I think as long as it holds this level, the big level, really big level is down 43. But I'm not willing to take that much off on a stock if I get into it. So this is the area that I would really pay attention to. This is where we have turned the last couple of times where we've seen some significant weakness. 48 to 50 has been an area to watch. So I would continue to watch that. Moving back above the moving averages is what you want to see as an initial signal that we have a shot back at 70.
Okay. And that completes the 10 and 10. And here are your symbols. I will have these up in the Market Watchers Live chart list, and you'll be able to get them just by going to the blogs tab. Find the Market Watchers Live blog, and the link is at the very top. And you'll get all these charts with all of Tom's annotations, so you can save them. And if you like that relative chart, that's an easy way to grab it as well. Okay. What is going on in the, what do we have planned right now? What's going on? First of all, I want to go ahead and look at ChartCon. That is coming up in August on the 10th and 11th. It is a streaming conference, so you don't have to pick up and pack and go to a hotel and be able to attend. You can attend from your own living room, office, whatever, wherever you are. We've got a great theme, reducing risk in uncharted waters. So you're going to see all of our presentations, if you look at the agenda, are all related to risk. And I can guarantee that you are going to like this, because those survey questions and the comments in the chat room, we always get questions about risk management, and you're going to get 2 full days worth of risk management. So highly recommend you check it out. Because it is online, it's very affordable. Like I continue to say, $249 is really affordable when you consider what you invest and what you could probably make and or save by going to the conference. And like I said, the best thing is it's streaming, but you also get to keep all of that content in your own live stream box, and you can go back to it over and over. So if you miss something, or if you need to be reminded of something, you'll be able to go back and get that. So if you want to check out ChartCon and register, it is at stockcharts.com/ChartCon. Okay, we had some interesting predefined alerts that I'll go over for our market update, and then I'll get into the DecisionPoint report. So you can go to sleep now, Tom.
I'm not going to go to sleep. I'll be here a while.
All right. So when I look at the predefined alerts for the day, I found 2 particularly interesting, that the utilities sector is getting a nice BPI reading. And we can see Russell 2000, of course, has crossed above 675. So I thought what I would do for our market update is, after we look at what's going on here, we'll take a peek at those particular sectors and see what's going on. Right now, though, this is a 2-day chart, so we can see what happened versus what's happening versus Friday. And as you can see, we're still trending nicely for the Dow Jones, up, now sitting right around intraday highs. The S&P 500 also up. Looks like it's consolidating right beneath the intraday highs, currently up $9.40. We can see that the NASDAQ at this point is up 2250, and it is pulling back off that intraday high, but I don't see anything to really be too concerned about. Mid caps and small caps, I don't like the action, the intraday action today, because we are looking at these double tops forming intraday, and that would, of course, suggest in the very short term that we should expect a decline about the size of the double top pattern. You can see that on the mid caps, and you're seeing it now also on the Russell 2000, which has fallen back. It's still up, and we can see that TSX, Canadian markets, are sitting right around intraday highs, mimicking the S&P 500 right now. The Treasury yields, as we were saying, are up today. Reading right now 2.96%. UUP is up, but pulling back a little bit, it looks like. Still up 2 cents, 24.66. Gold is also up. It is pulled back, but we're looking at 123.22 for GLD. So that's still a pretty good price move from last week. We have commodities that are mostly unchanged, but USO, it started the day with a really difficult gap down, but since then is just making really a roaring comeback. And now we see an intraday flag forming on USO, currently reading at 1338, and the VIX is near its lows, very similar to where we ended on Friday, reading at 1230. So seeing complacency still out there. Let's go ahead. I'm going to take you to look at that IWM chart, and then we'll look at XLU very quickly as well. So as you can see, we know that the Russell 2000 has small caps in general have been moving. Their relative strength among the major indexes has been undeniable. And it's interesting that we're starting to see a little bit of a consolidation here. And I'm very happy with that, because you can see our PMO is now starting to get overbought. I mean, I think it could still accommodate more upside at this point, but you can see it is starting to decelerate and it is overbought. So I would honestly expect in the very short term to see some consolidation, maybe a slight pullback down here to that 163 level, mainly because we do need to see these overbought conditions cleared. And I think that would be the best way to do that is through consolidation. We're still seeing quite a bit of strength in the small caps, so I wouldn't be too concerned about a giant pullback, but consolidation, possibly a smaller pullback into that 164 range. We'll have to see what ends up happening with the Russell. And the other one we were going to look at is the, let's see here, XLU, which is making a comeback right now. So let me get to there. And, well, I thought I had it in there already. Let's just go this way. All right. So, you know, XLU, we just got that predefined alert. And, you know, it is sitting now at an area where we are seeing some consolidation. But overall, you know, relatively, and we've talked about this, Tom, is, you know, it's not the best sector right now. We're seeing that pullback, that declining trend going on. And like I said, now I'm getting the PMO. It's in negative territory. It's falling lower. So I wouldn't get too excited about a turnaround in utilities just yet. And that concludes our market update. And I would like to now begin our DecisionPoint report. The DecisionPoint report kind of summarizes what Carl Swinland wrote in our DecisionPoint blog. He does a weekly wrap, and he pretty much covers all the major areas in the market and our indicators. So I wanted to just give you a peek at what I'm seeing in the charts. And I want to start off with the DecisionPoint scoreboards, and you can get those right here on your member dashboard, and you can see all 4 scoreboards. And at this point, if you see what this one looks like, you'll know what all of them look like. We're seeing rising trends, of course, in all 3 time frames. The only area that is sort of, you know, a problem or a concern would be those intermediate term PMO signals. And I do have some good news, and that would be on the NASDAQ 100. So let me go back to my chart list here, and we'll start running through here. So on the NASDAQ 100, let me look at that weekly chart, because that's where you're going to find those PMO signals. And currently, so on Friday, we did not have the crossover, so I could not log one for last week. But right now we are holding a PMO buy signal on the NASDAQ's weekly chart, but it is only Monday. And these signals do not go final until the end of the final trading day of the week. So while we have this PMO buy signal now on the NASDAQ 100 for the intermediate term, it's not official unless it still is there on Friday. I suspect it will be, even if we have a mostly no change kind of week. I think that momentum off this rally should get the momentum, the PMO, to move over that signal line and hold that crossover that we see right now. And the good news as well is if you look at the weekly charts for the other 3 major indexes on the scoreboards, you know, the PMO, we're not seeing buy signals just yet setting up. The Dow has probably got the largest margin between the PMO and its signal line, but it has turned up. And if we can continue, we might have another day where that PMO can manage to eke out some gains and move up higher. And eventually, I would look for that crossover, that PMO buy signal in the intermediate term. But we have a little bit of time to wait. Like I said, NASDAQ's already set it's up. When we look at the OEX weekly chart, again, we're getting that rising PMO. The margin is thinner than what we saw on the Dow. So I think these are all positive signs for the intermediate term. And I'm going to get into why I think the intermediate term continues to look very strong, which keeps me from worrying about a correction or major pullback. So the S&P 500's weekly PMO has also turned up, and the margin is very thin between the PMO and the signal line. So I would expect to see, there's a good chance we might lose that PMO sell signal in the intermediate term on the S&P 500 by the end of the week. So we'll be watching this chart very closely. And of course, if I do get those signal changes on Friday, I will be writing about them probably the following Monday. I don't want to step on Carl's weekly wrap, because that's really what you need to be reading and thinking about at the end of every week, as far as I'm concerned. So let's go ahead and look at the daily chart for the S&P 500 so we can get a peek at what's going on here. And you know what I've been watching very closely, as all of us have, we're up against some very important resistance now in the S&P 500. I think that when you look at the indicators, it suggests that we should get that breakout. You can see that the PMO, it was topping back here, but it did what I call a bull kiss. It did a fake out move, probably sucked some bears in, and then we saw that the renewal of the momentum. And so I like the S&P 500 setup here. You can see that the OBV, of course, is looking very, very good. We had some really nice volume that came in last week, and currently we're looking pretty good on volume. So I would be watching for that overhead resistance area to more than likely be broken. Not so sure it will happen this week. And I'm going to go through my indicators, and that will give you a heads up as to why I'm not so sure we're going to see it this week, that break above overhead resistance. So let's look at my climactic indicators. These indicators, I use them in the very short term. So I'm looking at these for, they give me information for the next couple of days. They give me an outlook for the week or what's going into the week. And right now, unfortunately, I have to say we're not getting really any climactic readings. On Friday, we just didn't see hugely climactic readings. We've seen far more readings higher than that. So as far as breadth, I didn't see anything helpful there. And when you look at the VIX in the thumbnail, it's really sitting right just above its average. We're not seeing any climactic moves above or below Bollinger Bands. So honestly, as far as climactic indicators go, I see them as neutral. And if you recall, Tom and I both went into this week neutral. And I think this is confirming those neutral votes. Not to say that we won't have any up days, but I suspect that overall by the end of the week, the S&P will probably not be changed by much. The hope, of course, would be that it doesn't pull back when it hits that overhead resistance like it's bumping up against right now. And I do have a little bit of a concern about that. Make this a little bigger here. And the reason I have a bit of a concern about that is that I have short-term indicators that are now getting very overbought. They're not extreme, but they're very close to overbought extremes. And I want to just show you what happens when these indicators get at these overbought extremes and what tends to happen afterwards. So here we go. There was a little bit of a decline there. Remember, these are short-term indicators. We saw after this particular climactic, after that overbought reading and it turned back down, we ended up with actually a pretty hefty decline. Off of that one, you can see the one we had here came in on a decline. You can see this one came in and we got consolidation. That's really what I'm looking for right now. Again, that sort of that unchanged, maybe some pullback. I think we might have some problems here at this overhead resistance, might need a little bit of a pullback. And that would bring these short-term indicators back down out of that extremely overbought territory. The intermediate term indicators, however, look very healthy. I'm very pleased with what I see here on these indicators. I know some might have been a little bit concerned. We got these negative crossovers and it was the readings continued lower, but I was watching this rising trend on these indicators. So I wasn't getting too antsy about it. And now we are seeing those readings. We're setting, we're getting that rising trend. It's staying where it needs to be. And now readings are above the previous top. So as far as the intermediate term is considered, I still think we have some run up. We have some ability to continue higher. So if you look at it in the short term, we've got some problems. But once those clear and we get some of that consolidation based on these intermediate term indicators, I would expect that overhead resistance to be broken at those February, March highs at about 2,800 for the S&P 500. All right, let's look at the big four, as I call them, dollar, gold, oil, and bonds. And really, I'm pleased that we're seeing the action on this chart that I was hoping for and expected. The dollar had gotten very overbought. I mean, this was an incredible move once we finally got a real breakout above this area of overhead resistance. And it really is, you know, it had a little bit of a pullback back here at that previous top from December and in October. And then it just gapped up above that, kept going. We started to see that pullback, and I was happy to see the pullback because, again, these indicators, the PMO is very, very overbought, and I certainly don't like to see that. I want to see it decompress, as I call it, or unwind. And that can happen on a strong stock or ETF like we're looking at now. That can happen on consolidation. It doesn't necessarily mean we have to have a serious pullback in order to fix that. And, you know, the move off this island reversal here, we got, you know, it's doing exactly what we should expect it to do. I'm looking for more consolidation, possibly a pullback toward that area of previous resistance and now support. It's necessary. We need it. The price momentum, the PMO is just really extended. And let's see, let's go ahead and look at, I'm going to look at the weekly chart for the dollar. And you can see we had that exactly what we would expect off of a declining wedge. We got the breakout. But what I wanted to note for you is that 17 and 43 week EMA positive crossover. So like I said, I think we're looking at some, you know, intermediate term, short-term consolidation, possibly a little bit of a pullback. But intermediate term, I think we're still looking at a pretty strong ETF in UUP. We've got that buy signal. It's continuing higher, and the good news is, of course, it is in positive territory. Gold has been interesting. I'm going to show you one of the things I want you to look at first, and that is the correlation between gold and the dollar. And, you know, typically, it tends to be a pretty tight inverse correlation, meaning a reverse or inverse correlation, because when the dollar goes up, you know, gold is priced by the dollar, and so in dollars, so that tends to make it an inverse setup. But what's always interesting is when we start to see gold decouple from the dollar, and that's really what we're seeing right now. So the dollar maybe in this process of consolidation and maybe even a little bit of a pullback. And that doesn't necessarily mean we're going to see the same consolidation and possibly a move upward, because that correlation has kind of is easing. So the gold can kind of do a little bit more on its own. And at this point, I would say, you know, normally it would be a nice setup with the dollar pulling back or consolidating for gold. But in this case, with that reverse correlation easing, and the fact that we have not been able to get above this area of overhead resistance, about 1310, that's what I've been watching for a very long time. You know, we got the buy signal here, and we just aren't getting much action off of that. And that concerns me. And again, if we can't get above that overhead resistance, and again, you know, with UUP, again, gold and the dollar decoupling, you've got some opportunity here for gold to consolidate and pull back as well. So right now, I'm not very bullish on gold. I'm expecting this area of overhead resistance to continue to hold. I'm not looking for a big time decline though in gold either. I just think we're going to sit in consolidation, maybe pull back to that 1280 range. That's a possibility. Oil, USO, really major pullback we saw, but we're now starting to get this move off of this area of support that pretty much matched up with the February top back here at the end of February. I'm expecting to see it move higher. We did what we needed. The PMO was very overbought, and now we're seeing it. We got the sell signal, and now it's starting to curl back up. You can see that with all of this oscillation above the 0 line, there's still a lot of internal strength in oil. And when you look at oil prices themselves, again, this is that area of overhead resistance at about 67.50 for WTIC. That might be a little bit difficult, but we're starting to line up. It's starting to look a little bit better. Might need to sit and enjoy a little bit more consolidation or pullback. TLT has been rather volatile. We got that intermediate term trend model buy signal. I reported on that, I believe, last week or the week before. And I knew when it came in, it was late. I knew we were ready for that pullback because it came in right as we failed to hold that breakout at 122, and it pulled right back. So that buy signal has not been very successful, but when it came in, I did warn that that was going to be the case. PMO has been very flat. I would expect that this area of support is just not going to hold. I'm still expecting bonds to fall further. And if we look at the weekly chart very quickly to finish off, I'm still looking at a sort of a complex head and shoulders formation with a rising neckline. It held up there, TLT did, but it's going to head back down, and I'm not feeling very bullish about it. Now, of course, we've got a PMO buy signal that's lining up currently, but I suspect we're going to see TLT fall further. I don't think that that will hold up by the end of the week, but again, we'll be looking at that on Friday. That concludes the Decision Point Report. Let me give you a summary of what we looked at. And the first thing I want to look at are the scoreboards that I went through. Remember, the trends are all rising, and the NASDAQ is about ready to get rid of that decline, excuse me, that sell signal in the intermediate term. Remember, we just got that positive crossover on the PMO on the weekly chart. We're just waiting to see if it'll hold up. And there's a good chance we could see the S&P 500 and possibly the 100 lose those PMO sell signals in the intermediate term as well. When we look at what the market conditions are based on our indicators, like I said, ultra short term, I'm not seeing much interesting there. I suspect that this week we're not going to see a whole lot of action. If you look any short term, you can see that we had very overbought conditions. I think that's somewhat bearish because I'm looking at it as an opportunity for consolidation, rising trend on intermediate term indicators. So that's a good for the intermediate term. And finally, to finish, there's the results on the Big Four. I will have this particular chart in the Market Watchers Live blog for you. All right, I know I cut it right down to the end there, Tom. So I guess we got to say goodbye really quick, but there's our weekly schedule, so you know what's going to happen in the coming weeks.
Yeah, and I do want to just remind everybody to complete that survey if you have an idea for my topic for tomorrow's workshop. Of course, I'll let you know tomorrow when we get here what it's going to be, but really looking forward to doing that for everyone. I do want to thank everybody for being with us today. Please remember to complete that survey I just mentioned as you exit. We'd love to get your feedback, not only for the show or for the workshop for tomorrow, but also what you think of Market Watchers Live. Market Watchers Live airs 5 days a week from Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll see you back here tomorrow. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.